What is going on, YouTube Nation? This is Darth Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. So I don't know if you guys have ever seen the movie Waterboy, where they have Michigan experimenting with Towel Boy. I am using a new headset. I want to see if this works. I messed around with the sound system a lot, did a lot of research on it. Today I put about an hour and a half trying to mess around with some sound. So I have a really hot stock that's out there, really good stock for dividend investors. Uh, I'll show you the history of JPMorgan, how it's blowing up. It also has a stock split history, so that's something to really look into if it starts blowing up. So some people don't think it'll ever split, but if it starts getting expensive, what do you think the board of directors are going to do? Just like what happened with Apple. So this is a beautiful stock. This is a great day trading stock. This is a great stock for your traditional or Roth IRA. This is a great stock for day trading. So I'm going to do a stock and dividend analysis on the stock. I'm also going to show you another bank at the end that I'm looking at adding on my M1 Finance dividend portfolio. And I found out a strategy which I will start revealing maybe in a year or so. I want to get my account a little bit stronger on M1 Finance, and I'll show you what I've referred to in, if you've seen Star Wars, the final order. So that's where I'm going to earn dividends every week on my M1 Finance dividend portfolio. I'm going to reinvest those. I need to have a lot of money first, but so that these shares can start buying more shares and it'll start getting more powerful. But this stock is one that I'm looking at adding on my M1 Finance dividend portfolio. I think this is a great stock. This is a powerful stock. This yields a very nice dividend. It's a very respectable stock and very respectable company. So there's a lot of positives about this stock, but we're going to check this out right now. The S&P has beaten JP Morgan since inception. I think what doesn't help is what happened during the recession, because a lot of the banks took a huge nosedive. It is starting to catch up, as I'll show you in the past 5 years. JP Morgan has beaten the S&P, even when it took that big nosedive during the pandemic. You see right here, was sitting right around $83 at its lowest. Now it's catching right back up to $160.69. So what you're seeing is a stock that is going up, okay? Already I can tell you this is a beautiful stock for a traditional or Roth IRA. And if you're a day trader, this is one that you might want to consider. Again, I'm not a financial advisor, but look at the trends on this. In the past 5 years, how it's done against the S&P, you're going to make money with this stock, okay? You're going to park it, leave it, let it reinvest. It is pretty expensive though. So, that's one, in the next 4 or 5 years, once my dividend portfolio starts getting bigger, hopefully this will be cheaper. But, this is one stock that I need to add to my dividend portfolio or my E-Trade dividend portfolio. If I'm really racking up the cash, to throw 2 or 3,000 or 10,000 into JP Morgan, I would absolutely do that, because not only is the stock increase its price per share, I may even throw it in a Roth IRA, because I know it's going to increase, my net worth. Okay, it's going to increase its price per share. It's going to yield a nice dividend, and it has increased its dividend lately. But this is what makes it a really cool stock. So it almost has a trifecta. It's dividends doing well. It's done well against the S&P. A bank, you're going to make money. Okay, and like as I said before, anytime you swipe a credit card, okay, doesn't matter if you're at a vending machine, you got a cashback card, you got a travel card or something, they have to pay a fee. Okay, these guys make money. They make money from loans. They get money from credit cards. They get money from think about the car loans too. I mean, that's unbelievable. And people sometimes don't make their payments on time. they offer loans to houses. I mean, there's so many things that JPMorgan does, and they make interest on it. But the one biggest thing I want to emphasize is when you swipe that credit card, okay, there's a fee. There's a transaction fee, okay? These guys make money, okay? Even if you use your credit card and you get cash back, they're still getting money. So they're kind of depending on you to not make your payment on time so that you have to pay interest. But you get those nice rewards, so that's what's beautiful about a cashback card. But at the same time, they're still getting something out of you. And sometimes you have to pay, if you have those really nice cards, like $100 a year or so fee. So this is something that's very nice about JPMorgan. Now I'm going to show you its dividend history, and it's done very well with its dividend history. So over time, JPMorgan, it's a quarterly dividend, has increased its dividend each year. It's not jumping up too fast, too. So that's a nice thing. A PE ratio of 12.76 according to NASDAQ.com. Annual dividend of $3.06. Dividend yield of 2.32%. So if you have like a fractional share Roth IRA, by the way, there is a special. If you sign up on M1 Finance, you get $30 and I get $30. So if you're considering creating a traditional or Roth IRA or a dividend portfolio, now's the time to do it because you get $30. I'll put it in the comment section. But JPMorgan, okay, is going to increase its price per share. This is what I like about this one. It's so hard for me to make the call. Okay, should I throw it? Because I am considering creating a Roth IRA on M1 Finance. This is going to be a stock. It's going to be hard to make a call with this one. Should I throw it in my dividend portfolio or should I throw it in my Roth IRA or traditional IRA? I haven't made a decision yet because I know this is going to increase price per share. And I'm going to show you its stock split history real quick. Split their stock in the past. Okay, this is what makes it really interesting. You're basically on JPMorgan Chase right now, showing you all the stock split history. So it's going to start getting expensive. Again, I am not a financial advisor. Disclaimer in the comment section. But if it's blowing up like this, it's going to eventually have to split. So that's one thing to look into. Is potential. There's no guarantees, but there is a potential for a stock split. This stock is increasing its price per share, it's increasing its dividend. It's going to start getting really expensive, and you're going to have to the board's going to have to make a decision because look at Apple. It got very expensive. This is a stock that it's just going to grow and grow and grow. It's going to increase its dividend. Revenue wise, it's doing very well. Okay, I know some people, I'll show you with their quarterly earnings real quick. I mean, you're a bank. You can't really do, it's describing a bank, okay, it's, how can you lose money? I'm just going to say, okay. So right here, let's look at this. Average deposits, client, average loans down, debit and credit card sales volume up 9%. So the loans are going to be down. I wonder why, because it's a little bit of a pandemic, okay? Total markets revenue 9 up 25% with fixed income markets. Average loans down. Just look at some things that are good. Okay, net revenue, earnings per share, diluted, net income. So this is not bad, okay? Net revenue on a reported basis, 32.3. So it's 29.3, 28 for the first quarter, fourth quarter. So from what I'm seeing, okay, is net revenue of 33.1 billion. Net income, okay, was up 14. Okay, so that's what I want to see. Okay, that's what I want to see as a dividend investor. And look, JPMorgan is a phenomenal company. Okay, they are a phenomenal company. and they would have to do something very stupid. They are 14.3 billion. That's pretty impressive for a bank. They'd have to do something really stupid, okay? And they've done well. They've rebounded. They're always in the news, okay? People always look at JPMorgan. What are they doing? What are they doing? They're on the big, shows like CNN and Fox Business and all that. What did JPMorgan do? What did JPMorgan do? So that says something, and that speaks volumes of their company, okay? So they're always in the news. That's one thing. They're not careless like Wells Fargo. Wells Fargo had some issues and they were exposed. These guys usually have their act together. I would say 90 nobody's going to have their act together 100%. There could be an error here and there. Let's just say 99.9% of the time I have enough confidence in these guys that they wouldn't do something stupid. Okay? They're a big company, excellent reputation. How can you go wrong with that? Okay, increasing price per share, increasing dividend, beating the S&P in the past 5 years. Sounds like a beautiful traditional or Roth IRA stock right there. Increasing dividends, increasing price per share, net asset value or net worth is going to increase. That's what your goal is, obviously, if you have a traditional Roth IRA. Now, I just did a lecture on AT&T. Now, that's not, the most popular stocks to have in a traditional or Roth IRA. That's more of a dividend portfolio and for the Benjamins. But let me show you a stock that is pretty good for a dividend portfolio, and it's a bank stock. It's actually pretty cheap. So I'm going to show you that one real quick. That stock is Huntington Bank shares. It's sitting at $15.72. And this stock is way down. Has a pretty nice dividend. Past 5 years was keeping in line with the S&P. Pandemic hit. Boom. Past year has beaten the S&P. So it's not too bad. It's pretty cheap actually to own this stock. I did have it when it took a huge nosedive in the pandemic. I sold it, and then I ended up making a really good profit and throwing in other dividend stocks. So it wasn't a loss to buy this stock. I'm actually considering adding this to my M1 Finance dividend portfolio because it's actually a pretty big bank. And I did a lecture on it. They have a pretty good reputation. It's not as expensive as JPMorgan. It's slowly increasing its price per share. And you're going to get a good bang for your buck because I'm going to show you its dividend history. You have this stock, okay, that went from 8 cents to 11 cents to 14 cents to 15 cents, increase its dividend over time, a 3.88% dividend yield. That's very attractive. I like a 3 to 5% dividend yield. And this is why I'm looking at adding it on my M1 Finance dividend portfolio. PE ratio of 13.67, 0.6 annual dividend. Cheap stock, good dividend stock, good yield. So that's one thing I want you guys to look at. Do a little bit of homework on Huntington Bank shares before you make the call on that one. We already know that JPMorgan is a beautiful stock, but this stock is a very attractive stock for dividend investors. I'm starting to ask myself, why did I even sell this? But I can probably buy this pretty well. I can maybe throw it in my Etrade dividend portfolio. I know I threw some money in crypto and I need to back off a little bit because I'm not too knowledgeable with crypto. I'm starting to get a little obsessed with like buying and selling and stuff with crypto. So I need to go back to my basics with being a dividend investor. So that's one thing that I emphasize with you guys is stick with your plan. I need to park my money with crypto, leave it alone, let it fly. Just like dividend stocks, put it in, let it fly. So I got rid of Doge, by the way, before it started to take a nosedive. I just think it's a pump and dump scheme, honestly. But this stock is increasing its price per share, increasing its dividend. It's not a bad stock for a traditional or Roth IRA either. So It's going to increase its dividend. Um, you know, a lot of stocks can buy this too in my M1 Finance dividend portfolio once the dividends start kicking in. So that's what I feel really confident about that. I'm probably in my M1 Finance dividend portfolio going to start with the energy sector and then do the financial sector and then go from there. But this stock is cheap, and this is one that I'm probably going to add. And by the way, the good thing is my sign-on bonus that I had, I'm going to be getting that, and I might be able to cash out some PTO so that I can throw it in my M1 Finance dividend portfolio. So I'm pretty excited about that. So let me know what you think of this video. If you guys are new to my YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. Make sure you smash that like button. Let me know how the sound sounds. It's a little bit of an experiment, and we'll see what happens with this. Hopefully there's not too much humming. I really messed around with the settings with OBS Studio. If any of you guys have an OBS Studio, feel free to send me a screenshot of your settings and stuff too. I don't mind, looking into that. I did a lot of research today since it was my day off and I work tomorrow. But let me know what you think of the sound too. So you guys take care and have a good one.